What is up, investors? Back again. Time to take a look at Levi Strauss Company. They just reported earnings tonight, and so we'll take a look at them. Ticker symbol LEVI. This is a company that has just recently gone IPO status, and the trend has been down. But this is not too uncommon. If you look at a chart of Uber or Pinterest or many companies that just recently IPO'd, this is typical action for recent IPO stocks. Now, more recently, the stock has been trading sideways, and we'll see why after hours. This stock is traded down another 4% after going 4% negative on the day. So that's a good 8% move after earnings have been reported. So we'll take a look at earnings. We'll jump into that. We'll take a look at some of the news the company made after hours. We'll give you a precursor to earnings of maybe you're not an investor in Levi's, but maybe you're doing other clothing companies like Nike or Lululemon or Under Armour or Ralph Lauren. There's a number of things that you can look at with Levi Strauss, and I think a lot of lessons that we'll be able to learn from Levi. So make sure you stay tuned towards the end of the video, and make sure you hit that subscribe button on my channel, and maybe consider that like button as well, because I will be going over all the major companies that report earnings over the next month. If you're a new investor, every 3 months, major companies report their earnings, and we're just getting into it. Levi Strauss is one of the early companies, but in another week or two, we'll have Apple and Amazon and Microsoft and Tesla, and all the big companies will be reporting, and I will be covering them all here on the channel. So let's get into it. Levi Strauss has made a 52-week high of $23. Not too long ago, this stock was in the 20s, and it bottomed out, we'll call it the virus low of $9. It wouldn't surprise me after we dip into these earnings that this stock retests that $9 level. So we've got a forward PE of about 37. Looks like they pay a dividend. We'll see if that's still the case. That's a 2% yield. Short interest is relatively high in this one. And we've got a $5 billion valuation in one of the more famous clothing brands in the world. Now, precursor to all of this is Levi Strauss back in April raised $300 million on a senior note at 5%, which is not bad interest rate, but you definitely will see lower from the likes of Apple and Amazon and some of the more financially stable companies out there. But if you follow a company, it doesn't have to be Levi's. If you're following a company and they're doing senior notes and they're fundraising, guess what, guys? The earnings are going to be an absolute disaster. So Levi's after earnings today said they're going to cut 700 office jobs. They're going to save about $100 million a year. That's not a whole lot of cost savings as we get into this. Now, let's take a look. Again, this is a clothing maker. They have their own stores, but probably the bulk of their sales are coming from, like a Macy's or a Dillard's or JCPenney, these kind of stores that sell their brand. Guess what? They were all closed during this 3-month period, and we see a absolute massive decline in revenues. We've got top line here. We've got a 3-month view and a 6-month view. These numbers are in thousands. So last year at this time, we had $1.3 billion in revenue. Guess what? All the way down to $500 million. That is an absolute disaster of a quarter. You can take a look at it from a 6-month view. We went from $2.7 billion all the way down to $2 billion. That's an absolute disaster of a quarter for this clothing company. And the longer things keep staying closed and the more people are losing their jobs and things like that, you can expect the next quarter, while maybe not this disastrous quarter over quarter or year over year, might end up being similar to this number, if not worse. And that does not bode well for Levi Strauss going into the next earnings. We see gross profit here. Not a bad, honestly, this is more gross profit than I'd expect out of this clothing maker. This is close to a 50% margin. It's actually a lot less here. And that's because they really couldn't get this cost of goods sold under control, even though revenue slid as much as they did. You see here, this number slid by not quite 50%. This number slid by over 50%. So cost of goods sold actually went up in the quarter in relations to revenue. That is not good. Selling and general administrative, boom, $500 million for the quarter. Again, we looked back here. They're going to cut these 700 office jobs, but they're only going to save $100 million a year. So that is only about, call it $50 million a quarter. So that, look, that's not going to make a big difference. Okay. And look at this quarter here. We had $550 million of general administrative. So you can call it 500 million. It doesn't matter when your gross profit was $179 million. And even when you look back here at $700 million, taking away 50 or adding 50 to that's not going to do a whole lot. We've got an operating loss of $450 million for the quarter. That comes off a year where they did 62 million the prior period. Now, on a 6-month view, this completely screwed up their financials. They went from $264 million in operating income all the way down to $270 million loss. Let's come down all the way to the brass tacks. Net income, we've got $363 million for the quarter, and now we're running at $210 million loss. So let's just keep that in mind. You know, if let's just give Levi Strauss the benefit of the doubt, the next quarter is going to be bad, but maybe not as bad. We'll give them a $200 million loss for the next quarter, so we can see, you know, for a whole 12-month period or a 9-month period, they're going to lose well in excess of, you call it $400 to $500 million. That is not going to be good. You see here, they retired some shares. We'll notice that in the cash flow statement in here in a minute. Now, what you want to do now is, okay, Levi's is going to lose $400 to $500 million in a quarter. And so let's come back to the balance sheet and see if they can withstand that. So here we have Levi's balance sheet. And again, they're going to lose $400 to $500 million probably this year, maybe more than that. And we've got cash and cash equivalents here of $1.5 billion. Got some short-term cash basically here. You round that up to $1.5 billion. That is opposed to about $1.1 billion in the prior period. And so we know this didn't come from operations. So we'll look on the cash flow where that came from, but you can bet that most of it came from this senior note here. So moving down through the balance sheet with these clothing companies, you want to take a close look at inventory. We have total inventory here that ticked up nicely. We went from $884 million all the way up to $986 million in inventory, likely because, again, Levi's stores were closed, but Macy's and Dillard's and the other places where they sell their wares, they probably were saying, don't send us anything, Levi's, keep it. And so that's where a lot of this inventory. So they're going to have trouble moving through this inventory the rest of the year as stores still remain closed. And I'm sure foot traffic won't come back, dollar for dollar for a long period of time. I would guess for at least 6 to 12 months, maybe even longer than that. That gets us to a total assets of $5.5 billion. But again, a lot of that is tied up in inventory, and we've got this $1.5 billion worth of cash. Now, unfortunately, they have short-term debt here of $300 million. We've got $300 million in accounts payable, $140 million in salaries that they need to pay. We've got some restructuring cost as well. We've got long-term debt down here at $1.5 billion. Again, this is a company that has $1.5 billion in cash, but they have almost identical amount of long-term debt to go along with about $300 million in short-term debt. They've got some pension liabilities and some other things. We've got a total liabilities of $4.3 billion. Notice how much this went up. We went from $2.6 billion in liabilities all the way up to $4.3 billion. And that is in a very short period of time, about 6-month period of time. If that continues, this company is not, I'm not going to say in a lot of trouble, but I can see why they are doing some fundraising. Now, finally, I'll scoot down here as quickly as I possibly can down to the cash flow statement. I want you to pay attention here. Okay, so we've got this net loss here, this net income. We slide that down. We lost $210 million in the 6 months ended, but we can add back some depreciation, amortization. That's not cash. We've got some impairments here. That's not cash. We've got some other stuff. We did have positive cash flow, but we compare that to the prior period. It's down, fourfold. So we went $161 million cash flow positive down to $41 million. And then if you look in the investment activities, they had to purchase some equipment, some other things here, more payments, and then we get down to the debt. Here's the proceeds Here's the $300 million senior note here. Here's more from a long-term debt they issued. Again, this is all fresh debt on the company. That's $800 million. That's where most of the liabilities came from, where we saw on the balance sheet there. We get all the way down here, net cash provided by financing activities. Look, it was still negative. Even though they issued $800 million here, it was still negative. So not good at all from Levi Strauss. So where am I sitting at with Levi Strauss in terms of buy, sell, hold? To me, this is a no touch. In fact, all clothing brands, even ones I like, I own Nike, I like Nike, still wouldn't touch it at these levels. Levi Strauss not trading at a real reasonable price to earnings. And the longer that stores stay closed, the longer people are losing their jobs, the more it's going to hurt Levi's. And then even when they are able to reopen, they have all this inventory that they need to churn through. That's not going to be a good thing. That's going to hurt margins. That's going to hurt the supply chain going forward. I'm not bullish on Levi's. In fact, it would not surprise me if this company is going to retest these $10 lows or around there in the next few weeks to months ahead, because there's just not much going to drive this company forward. Okay. We got things are closed right now, outside of any kind of miracle drug coming onto the market that cures everybody. I don't see stocks like this being able to turn around, because investors are now going to expect the next month to be a complete disaster as well. So I would not touch Levi Strauss, but I would also take it as a warning for the rest of the month, as we have stocks that are deeply impacted by the situation that we have going on right now. They are going to slide. They are going to slide 4% in the day, and then after earnings, they're going to slide even more, and then they're going to start firing people, which is going to hurt employee morale and things like that, and it's just not a good sign. I would not want to be investing in companies that are cutting to make the financials look better. I'd rather invest in the Walmarts and the Amazons that are hiring people because they have so much demand right now. I would avoid the clothing and retail sector in the time being, and Nike's earnings and Levi's earnings just reinforce that. I think we're going to head for more of this as we move through the earnings season. I would tread very carefully as we move forward with stocks. There's not a lot of positive catalyst on the horizon, and Levi Strauss is representative of that. If you've got a stock you'd like for me to cover here on the channel, leave me a comment below. I'll get to it as quickly as I possibly can, likely this month as earnings are report. Subscribe to the channel and expect lots of videos this month and next as we move through earnings season. Thanks for tuning in. Good luck with your investments.